Hey traders, Raghee here, and in this video we're going to discuss a question that I got a lot of in the chat room actually, and that is, was today's pullback on the December contract of gold enough, and is this a support level? The lows that we put in today, is that a support level we can work with? So I'm going to refer to two things, and these are the touchstones for a lot of what I do. It's not just price. In fact, it's not even price predominantly at all. It's volume and it's volatility at price. So price can make highs and lows and whatnot, but unless I can see significant volatility getting down to that level, or for the entirety of the range for the session, or if there there should be some volume occurring at that low may not be otherwise really all that useful or actionable. So with that being said, let's talk about the December contract of gold. That is now the front month. We've left August, and you'll notice the volume and the open interest is in that December contract. So keep that in mind. That's the GCZ contract. All right. So then let's take a look at this move. It doesn't look like much, does it? And that's kind of my first reaction when I saw it. We put in a higher high and it doesn't really look like much, but I will tell you the low that we have here is a volume level. So if I take a look at the kind of volume we've seen since the end of June, and I'm taking a look at the low we made around 1977, 1976, 70, that area, there is a good bit of volume sitting down at that level. So I will pay careful attention to that. It might be better for a potential intraday trade. So if I can see an intraday 60, maybe 30-minute, or even a 1-minute chart get down to that level around 1975 and a half. If I can see some sort of level, even intraday, I might prefer to do that rather than commit to the end of day. But if we get a print, if we can get down to 1975 and a half, I might look at the MGC, micro gold, or I might look at the options in the full-size GC contract, again, the December contract month. So was this enough? That's one way we looked at it. Was there volume? Yes. What about volatility? Well, the typical price movement range for an entire session of gold, if it's going to be on the upper end of volatility, on a Monday should be about 33 to 45 points. 33 to 45 points from top to bottom. So you can see here, we had a high at 209, we had a low at 1975. So what I'm thinking here is, was that enough from high to low considering the typical price movement range? Well, some quick math, and you'll say, well, Rog, that was 34 and a half points, right? 34 and a half points. I'm looking for an average of about 33, the upper end of 45. Now, this wasn't a dramatic move, but at least it's along the lines of the average move. So would I call that exhaustive? No. If we would have sold off closer 40, 45 points, one, that would have gotten our attention because we would have put in a lower low than we saw on Friday, and that definitely would have gotten my attention. But I think that this is a pretty good level to keep an eye on. So tomorrow, if we can sell off another 34, 33 points, even up to 45. Let's keep that in mind for a potential buy. And perhaps you shorten the time frame and you look for an intraday opportunity. But let's keep an eye on that. And remember, we do have an interesting volume level sitting right around 1975, 50, 1976. Let's keep an eye on that as well as a level that we can use for a buying opportunity. All right, so that's what I see in the pullback in gold today.